Ladies and gentlemen, good day and welcome to Easy Trip Planners Limited Q3 FY24 earnings conference call. From the management, we have with us Mr. Nishant Pitti, Chief Executive Officer, Mr. Prashant Pitti, Managing Director, Mr. Ashish Bansal, Chief Financial Officer. As a reminder, all participants' line will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Prashant Pitti from Easy Trip Planners. Thank you, and over to you, sir.
Good evening, everyone, and welcome to Quarter 3 and 9 months of FY24 earnings call of Easy. I would like to thank you all for joining us today. Our earnings presentation and press release has already been uploaded on our website and stock exchanges. I hope you all had a chance to review it. To start with, I would like to begin by highlighting the remarkable performance of Easy for Quarter 3 and 9 months of FY24, and would be happy to take questions afterwards. I'm glad to announce that our company has had sustainable growth during the quarter, continuing the strong momentum in our operation, and we are continuing to enhance our focus on profitability. During Quarter 3, the gross booking revenue was of 2,026 crores. Our revenue from operation grew by 18% year-on-year to 161 crores. EBITDA had grown by 10.9% as compared to Quarter 3 of previous fiscal year and was 65 crores, and the PAT year-on-year grew by 9.6% to 45.6 crores for this quarter. During 9 months, the GBR grew by 8.7% to 6,427 crores. The EBITDA had grown by 18% year-on-year to 171 crores. The profitability after tax was 119 crores and an increase of 15% year-on-year. During this Quarter 3 and 9 months of FY24, we have put strong focus on maximizing profitability. Coming to our operational performances. During Quarter 3, our core segment, air travel booking, recorded 22.6 lakh bookings. Hotel segments recorded 92,000 bookings. And bookings in other segments grew by 82.5% to 2.7 lakh. For the period of 9 months, there were 83.7 lakh air segment bookings. Hotel line bookings increased by 49% year-on-year to 3.7 lakh. And other segments had a significant increase of 72% to 7.6 lakh. We have executed several key initiatives during Quarter 3 of this year to drive the growth. I'm happy to announce that during the quarter, we have acquired 13% stake in Eco Hotels and Resorts, reflecting our commitment towards sustainable and responsible business practices. By fostering environmentally conscious initiatives, we aim to shape up the future of travel and hospitality industry positively. At the Global Investor Summit held in London, we officially entered into a memorandum of understanding with Government of Uttarakhand. This partnership is aimed to enhance Uttarakhand's global appeal as a tourist destination. Utilizing Easy's extensive global network, the goal is to quantify and expand Uttarakhand's tourism sector. We have also introduced Easy Darshan, providing curated pilgrimage packages across India. These packages offer hassle-free journey, including transportation, accommodation, guided to special puja, prioritizing safety and convenience. Additionally, we have also launched Explore Bharat, Discover the Soul of India, to showcase a nation's rich heritage, culture, landscape, and targeting overseas travelers. These initiatives underscore our continuous expansion in services catering to niche customer segments. Moreover, we have also announced an invite-based subscription program for high net worth individuals. Through this program, we are excited to offer a range of benefits and plans designed to enhance these travel experiences, offering substantial savings, exclusive privileges, and dedicated support that they truly will enjoy in their journey. Our partnership with VI is aimed to bring more convenience and best offers to VI users and ensuring travel bookings become easy and seamless for them through VI application. EasyTrip has also been awarded the Best Online Travel Marketplace of the Year in B2C category by ET Travel Awards. We have always been dedicated to offering a wide range of travel services. As travelers' needs evolve, we continuously expand our offerings to meet the demand. Going forward, we are focusing on growing our air ticketing businesses globally and expanding our presence into other areas like hotels, holidays, and other travel services. We are also expanding our footprints domestically and exploring ways to grow organic and inorganically. These moves align with our commitment to continuous growth, providing comprehensive travel solutions and ensuring smooth experiences for our customers. In conclusion, EasyTrip delivered a strong performance in Q3 and 9 months of FY24. We remain to focus on our strategy of striking balance between profits and top line. We are confident that our strong foundation and unwavering commitment will continue to drive our success. Thank you, Ram, and I would like to open the question and close. Over to you, moderator.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants are requested to use handsets while asking a question. You may press star and 1 to ask a question. The first question is from the line of Manik Taneja from Axis Capital. Please go ahead.
Hi, thanks for the opportunity. I just wanted to understand a few things around the quarterly performance. If you could first of all talk about the fact that why are volumes across both air and the hotel side were down on a sequential basis despite Q3 being a seasonally strong quarter. That's question number one. Second question was...
Okay, please go ahead. Ask your second question. I'll answer.
The second question was with regards to some of the implied arithmetic given by as per the breakup that you have provided on the GBR breakup between airlines, hotels, and other segments. So on that front, if I look at the ARR for the hotel side, that appears to be about 17,000 odd for my calculation. If it is a good understand how is this significantly higher than what we see typically for competition. The third question was with regards to the number of equity shares that we have, since some of the acquisitions that we made were essentially stock inward pledge issue. Is there a reason why the total number of equity shares has not gone up? And the fourth question was with regards to our cash flow, in terms of the negative working capital that we continue to see towards FY23 as well as the first half of FY24.
Okay. Manik, thanks for all the questions. I'll try to answer them in the order you are. Question number one is related to the volumes. The reason why it decreases, Manik, as you would see that our discounts have also gone down dramatically. They've reduced the discounts from about 4% to 2% in this particular quarter. If you compare quarter, compare it yearly, on the yearly basis. So the discount, as we have mentioned, that the company has continued to focus on profitability. We have reduced the discounts quite considerably for this particular quarter, which is why we would see the volumes go down. Related to your second question, can you please repeat? That is why I was asking that if you could just wait and let me answer the
Next
question.
question was with regards to your status of the GDR that you provided between airlines, hotels, and other segments.
So this time for the first time, we have provided the GBR split as it was requested last time. And you could see in terms of GBR, our flight versus non-air is about 90-10. And in terms of revenue, it is somewhere around 78 and 22%.
Sure. So I understand that. I was just trying to compute the average weighted booking rate, and that comes out to close to about 17,000 given the volume that
And actually, it doesn't just have hotels, Manik, it has packages as well.
Okay.
Included. So hence it's a blended number of transactions is what probably you're seeing. You're dividing GBR by number of transactions, but hotels is not a standalone hotel. It has packages as well. That is why the number might have come out a bit larger.
Okay. The third one was with regards to the equity, number of equity shares that we see in your BFC release. When we made a few acquisitions at the start of this year, we get that involved in an issue of the shares, but the total number of equity shares in that BFC release seems to be unchanged through second quarter as well as third quarter. So what explains that?
Ashish, would you know this answer?
Yeah, I pick up the question. The shares were issued in quarter two itself, so there is no change in quarter two and quarter three shareholders.
Okay, I understand that, but the number of shares, even from an year-on-year perspective, there is no change. Okay, so I get it. I get it. And last one, with regards to the cash flow that we see, we generate negative cash flow both in FY23 as well as in first half of FY24. What explains the negative cash in this type?
So in this particular quarter, I don't think so there's a cash flow information. But yes, compared to last 2 years, the cash flow has been negative, primarily because we have been depositing slightly more money with the airlines, which significantly because the business is increasing dramatically compared to the last few years.
Okay. And if you could call out the contribution of the increase in pay rates that we are seeing at an overall level because of the GST agreement that expired, and also call out or provide some details on the sales and marketing agreement that we signed up with the customers at the start of this year, which is contributing significantly for bringing to the improvement in the take rate because of the income or revenue recognition that you are doing on a quarterly basis.
Sure, we will consider this.
Thank you, Honorable.
Thank you.
Thank you very much. A reminder to all the participants, you may press star and 1 to ask a question. Thank you. The next question is from the line of Bala Murali Krishna from Oman Investment Advisors. Please go ahead.
Hi, good evening. So my question is regarding the last 3 acquisitions which you had on in the month of September. What is the contribution of the 3 acquisitions in this quarter and the market on both days?
So I think that the acquisition which we did in last quarter, some of the numbers have added up in this particular quarter, and because of which you might even be seeing that our employee cost has increased, and that is primarily because of the newer acquisitions which have happened. In terms of contribution, Ashish ji, are we mentioning contribution separately, or is it 2 types of files which you are doing right now, standalone and consolidated?
It is consolidated in the console number. It's not separately mentioned.
So it's not separately mentioned at the moment. But yes, in this particular quarter, the effect of the 3 acquisitions have come. Because of the 3 acquisitions, our other expenses, one-time other expenses have also increased in this quarter, which is why profitability came slightly lower than what it should have. But those are one-time expenses related to acquisition, which has become part of our other expenses. And you would see that our other expenses in this particular quarter jumped to about 30 crores from what it was in the last quarter at about 20 crores. So, certain portion of that also went into the 3 acquisition, which is why profitability came slightly lower than what we were anticipating.
Yeah, I see that 2.1% of the average. So can get into previous 1% of the expect the next quarter?
We do expect something similar numbers, yes.
Yeah. Okay. And regarding this follow-up on these 3 acquisitions only, so the EBITDA on this we are getting from the acquisitions is positive or still it's under the Q1?
That would be not, I will not be able to share it because we have not given specific numbers in each of these acquisitions for this particular quarter.
It's fine. That is fine. Look, no, we don't have, but because we are focusing on the holiday package section. So, there the investors would like to know how this.
No, I understand, but I may not be able to share because we have not shared it in this result at this moment.
Okay, fine. And regarding it, discounts in this quarter, we are came to 2.2% from last quarter, 4%. So, what about how it will be percentage of the revenue? Or the here?
So, of course, we have reduced. The idea was to reduce the discount, but not let GBR fall. And which is why you can see from 4%, the discount went to 2.2%, yet the GBR remained flattish between the 2 quarters, or, it didn't decrease much. The last quarter was 2025 crore and this quarter is 2026 crores. So that's a significant improvement. The company is able to optimize reducing discounts without reducing the GBR, and which are the healthy signs which you should look in the company, where the company is able to grow not on the primarily on the basis of the discounts which they are offering.
Thank you. The next question is from the line of Santosh from Pat to Wealth. Please go ahead.
Hello. Yeah, thank you for the opportunity. Sir, I have a question regarding your acquisition in this quarter about Eco Hotels. Looks like this is a hotel in Maharashtra. Can you explain what is the rationale behind the acquisition? Doesn't seem like it trades in BSE, but it doesn't have any revenue aspect as per what they have published.
So basically, it's a chain in the UK, and yes, they are starting up the operations in India. It's basically an ecological. We have already acquired 3 hotel chain, as you must be aware of. Eco Hotel chain basically will allow us to foray into sustainability and providing customers a sustainable way to travel. There has been strong momentum towards that side. Their customers are looking for ecological and sustainable ways to travel, and this is why we have taken a minority stake of 13% in this company.
And what will be the revenue of this hotel chain globally?
I may not be sure about their numbers correctly, but the minority stake which we have built in the company. Given that their chances to grow in India are quite considerably higher, and we can promote them, we can cross-promote them on our platform, we have taken minority stake in the company.
And this minority stake is only in India entity or it's all over?
It's in the India entity.
Okay. And regarding their EG platform that you are our plan to promote to India, do you have strategy for really open up that temple? We see a lot of focus for tourism is going to be generated there. So any specific plan for that?
So of course, that's a good question. We really believe that Ayodhya can become the next Vatican city for the world, where not just people from within India, but even from outside India can come and travel. And at Eastmatter, we have very strong plans to grow along with as the number of footprints in Ayodhya increases. A case in point which we have seen firsthand is actually Varanasi. Varanasi about 10 years ago used to see about 25 to 30,000 tourists on daily basis. And nowadays, Banaras is seeing anywhere between 4 lakh to 5 lakh tourists on daily basis. So, religious tourism is actually a very big category in India, and which is why we have started a separate services altogether related to it, because it needs to be dealt differently. We have realized most of the time these packages are booked by the sons and the daughters for their elderly payments, and hence the requirements, the needs, everything is very different. And we are looking forward to grow in this segment. There are special plans which we have related to Ayodhya, but we will grow as the capacity of Ayodhya continues to increase.
Got it. Okay, thank you. So coming back to this hotel acquisition, so do you have any further plans that you'll be going to acquire other hotels in India in the future?
That would be difficult for me to say at this particular moment. But yet, if there is a company like Ismatel, which is asset light, which is disruptive in nature, which is profitable in nature, and if it is adding value to both the companies, we will not shy away. But at this moment, it will be difficult for me to say whether we will or we will not.
Okay. Got it. One last question regarding your service cost and expense. Service cost looks like 9-month period, it increased like 3-4, and the employee expenses are almost double. So can you explain the reasoning behind it? Is it like operating costs or
No, I mean, I did explain this now when related to it. The employee cost specifically in this particular quarter increased, specifically because we have added 3 more subsidiaries. And with those 3 subsidiaries, their employee also got added into the cost structure at the moment.
Okay, makes sense. Thank you, and all the best.
Thank you.
Thank you very much. The next question is from the line of Bala Murli Krishna from Oman Investment Advisors. Please go ahead.
Hi, thanks for the follow-up opportunity. So I'm talking about regarding the guidance. So we have a guidance of PBT of 250 crores for the year at 24 earlier. So are we on track, or do you expect any uptake on the guidance?
So, we would be trying a little bit to reach that number, but it looks like we might fall short by about 25-30 crores, specifically because I said that in these 3 acquisitions for this particular quarter, the other expenses has increased from the amount which we were not expecting. And some of the other expenses may even come in the next quarter, because of which I think we may have to change our guidance variance to about 220 odd crores. For probably for that.
Yeah. And one more thing, recently we have seen a surge in the app download of the United. So do we see any bookings from the new users recently in the last 1 month or 1.5? Is there any service those apps on because of those app downloads of the new users?
That is correct. We took a nationalistic stand in this particular quarter, and on the basis of that, we got a lot of people who basically stood by with our decision, and on the basis of that, the number of app downloads, the number of website visits did increase. I may not be able to share all the numbers at this particular moment, but yes, overall visibility of the company has increased many folds in this particular quarter.
So, thank you. Thanks a lot for 1 minute.
Thank you very much. A reminder to all the participants, you may press star and 1 to ask a question. The next question is from the line of Madhuchanda Dey from MC Pro. Please go ahead.
Yeah, hi. Thanks for the opportunity. First is a housekeeping question. There's a sharp spike in the depreciation and amortization expense this quarter. If you could explain that.
Ashish, are you on the line?
Yeah, I'm on the line. Am I audible?
Yes. Go ahead.
Yeah. Basically, this quarter, we did few acquisitions, and because of this acquisition, we recorded intangible in our balance sheet.
And now we are amortizing the same over the period of useful life. So that's why it has been increased.
So we can expect this run rate to continue because I was also thinking that it could be goodwill amortization, but of the 3.7 crore, what would be the recurring run rate of this goodwill amortization?
It will be recurring in now. Now it will be recurring. Because it's every quarter it will be amortized.
Okay, and you expect to amortize this over a period of
5 years. Or useful life of the asset.
useful life of the asset. Okay. Now, I have a question, which is a little more general question. Like last quarter, the company shifted its focus on profitability. I mean, of course, it was a profitable company all along, but there was in between, there was this thing that you kind of resorted to increasing advertising expenses and you wanted to grab market share. But last quarter, the rationale was we want to be more profitable. We were guiding to 250 crore PBT, and growing GBR was not the focus. And we have seen this in this quarter, although it's a seasonally strong quarter. GBR has been flat sequentially. There's a YOY decline. But given these acquisitions and other pressures, and in fact, ad expense also as a percentage of GBR is up, maybe because of this post-Lakshadweep thing, we saw you guys advertising in a big way. So basically, the margin has contracted despite this change in strategy where you are not chasing market share. So the result is you have lost market share, and always the loss of market share, the profitability has not improved. Whereas if I see your largest competitor, their GBR has improved YOY sequentially. They have been able to maintain margin as well. So, I mean, if you could explain how do you plan to tackle this going forward?
No, Madhu, good question, Madhu. So, Madhu, I would want you and others to see company in more holistic way rather than see on quarter basis. Yes, some quarters, GBR increases, some quarters GBR don't increase. For us, the bigger win in this particular quarter was how do we maintain, our GBR while reducing the discounts. And we did reduce the discounts quite considerably sharply in this particular quarter. And yet we were able to maintain, the number of GMV, the GMV in the same way. So hence, we are taking one win at a time. And, you also have to understand the DNA and the, DNA of the founders of this company. This company was built bootstrap. We are very high on perseverance and grit. And hence, one quarter here and there does not really bother us as much as whether it is aligned with our long-term strategy or not. And in long-term strategy, we have, as we have mentioned earlier, we have started experimenting with charging convenience fees. We are reducing the discounts. While the idea is to continuously maintain or grow our GBR. But some quarters, yes, you're right, we may not be able to maintain our GBR specifically because we have taken a call of reducing the discounts. Next quarter onwards, I think you should see, things change dramatically, especially in this particular quarter, as you have mentioned. The company did gain a lot of, eyeballs, and there was a lot of public on across India, which was on our side. With very limited amount of marketing, we were able to gain a lot of, people's attention. Though I would like to say that was not the intent. The intent was very clear that, we were very sure of what should be done, whether irrespective it financially makes sense or not. Good thing is that for the company, it did make sense financially, but the call was very nationalistic in approach and just to do the right thing. But going forward, I think, you should be able to see strong numbers come.
So I didn't understand what has changed. I mean, I understand that, post that, that Lakshadweep mortgage controversy, you did get a lot of limelight because of a particular stance that you took. But is that the reason why you expect this trend to reverse the stagnating GBR in Q4? Or is there something that I'm
So GBR went down specifically because I said that we've reduced the discounts dramatically. The profit did not grow because our other expenses grew by about 10 crores. And yes, in this, but and then otherwise as well, in terms of acquisitions, when you're acquiring multiple companies, there are certain things which you expect and which may not come out the way as you were expecting. So because of this, some expenses in terms of other expenses increased in this particular quarter. Otherwise, we were expecting to see 5-6 more crores of profit in this particular quarter.
Okay, thank you.
Thank you very much. Ladies and gentlemen, you may press star and 1 to ask a question. Thank you. The next question is from the line of Manik Taneja from Axis Capital. Please go ahead.
Thank you for the follow-up opportunity. Prashant, just trying to pick your thoughts around the previous question itself. When we went for an IPO 2 years back, we were very clear that we wanted to continue to gain market share and solidify or reduce the lead of the number one player. And in terms of DBR, we have been the number 2 OTA in the industry. With the way the change in strategy that we have seen this year, it appears that we will essentially lose the number 2 spot in terms of being the second largest OTA in India. Will you be okay to essentially do that? That's question number 1. The second one was clarification on the other expenses. Historically, this also included some part of the expenses that we would incur around our B2B business. And whenever that business would do well, this number will increase. So is there some element of that contribution as well, in addition to come to the acquisition impact, and how should we be thinking about this expense on a go-forward basis?
Related to your first question, Manik, we would like to maintain our second position spot, and we are working towards it. In this particular quarter, you should see that number do its work. And I don't think so there's any cycling towards us being in that position. You're right. In this particular year, we have taken a little bit more conservative approach. Rather than growing the business, we wanted to maintain our profitability and grow profitability. That may not be the case going forward, but for this particular year, we did take that call, and that's the management's call. The board, we decided it together. I'm forgetting, what was your second question again?
So my second question was in regards to other expenses, which you also remarked that become about 31 odd crores versus 21 crores last quarter, and typically that also includes some part of the B2B or the cost that is related to the ramp up of B2B business. So how much of this increase essentially is acquisition related, and how much of it is B2B business related, and how should we be thinking about this cost item on a go-forward basis?
So half of it is coming from related to acquisitions, and half of it is coming from B2B. You're absolutely right. And B2B business, as long as it is done basically in advance, the company is quite happy to continue to grow that business. And hence, that number may increase in the future, but that number also brings profitability and revenue alongside. So that number is something which we are not worried about. It's just that the other expenses, which basically turn out to be an expense, cause this company a little bit of a hard time. But otherwise, B2B business is something which we are excited about, and we would like to continue to grow that business.
And the last one, if you could clarify on with regards to the outlook that we had. So at the start of the year, we are talking about a significant growth from a GDR standpoint. Subsequently, we shifted focus to profit, and we talked about a certain amount of increase in terms of PAT for FY24 last quarter. If you could update us on the revised outlook on that front.
So as I said that our last quarter is where we said that we are focusing PBT of about 50 crores. I believe that we will have to change that strategy to about 220 odd crores for this particular year.
Okay. So thank you and all the best.
Thank you very much. As there are no further questions, I will now like to hand the conference over to Mr. Prashant Pitte for closing comments.
Sure. Well, thank you all for joining us today. The quarter concluded positively, and we maintain optimism regarding the robust growth trajectory for a wide range of services. We are excited about the opportunities ahead of us as we have a solid value proposition for entire sustainable performances. We look forward to meeting you in next quarter. Please stay safe, healthy, and feel free to reach us for any unremained question answers. Thank you once again.
On behalf of Easy Trip Planners Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.